Hey guys, Boris House for BK Forex. Welcome to our BK Weekly Technicals for 8/25/30 through 2014. Where are the trades? Well, a very interesting week this week, but a lot of heat, very little light. The euro continues to go down. We broke the 3250 level. We couldn't quite make it to the 3200 level, but still, this when the big level originally was the 3330. That was given. 3300 fell down, then the 3250 came down. We're clearly getting, I think, to the much closer to the bottom than we have been before. 3150 is a big support level. I don't know if we're going to get it quite there before we pause and do a little bit of a bounce back. But the overall tone of the euro is just sell the rallies continuously. The fact that we couldn't even muster a medium-term rally suggests that probably we're going to have a little bit more downside and then eventually a move perhaps to 3350, maybe even 3400. 3400 now becomes the shelf, which is the primary resist point on any kind of a retrace rally, and probably a good entry for shorts if you're looking to sell on a retrace. 35, which I originally thought was going to be the bounce back point, is really far away. It's going to require a lot of momentum for the euro to come back up to this level. So overall, we still have a situation effectively where U.S. moving towards tightening, Europe continues to move towards loosening. That creates a very negative dynamic in the pair. There's little here to want to prop it. Reserve diversification, all those ideas have been the story front of the year. The back of the year looks to be very strongly a dollar trade. And unless we get something completely different in terms of geopolitical or economic fortunes, for the time being, the trade is to the downside. I actually think one of the more interesting economic correlative variables that you want to keep an eye on is weekly jobless claims. If those numbers continue to be, unless we see weekly jobless claims creep back up above 325 towards the 350 level, we basically have to assume that the U.S. economy is on a growth path, and therefore the euro dollar continues on a slide to the downside. So as a longer-term data point, the only data point that you want to isolate, that might be a very good one in terms of correlating it to the euro for longer-term trades. But on the looking into next week, this is the last week of the summer. Still a very, very light calendar. Really nothing, no more news flow at this point from policymakers. So there may be just some kind of a reprieve, maybe a little bit of a bounce back. But at this point, as I said, 3,400 is the real big support level. Now, yen, on the other hand, is a very different story. And what was interesting today was that we came there, but not quite. And by not quite, I mean we did rally through the 104s, but couldn't quite hold it on the close. And that, I think, is still relatively significant, because the fact the 104 level, if I zoom out, or if I can just, let me see if I can just, yeah, sorry, I'm zooming in here. I want to actually zoom out. I want to see if I can just move this around a little bit. Yeah, you can see that if I move it around, you can see that this 104 from April, really, really clear resist point. We almost failed to the pip right at this level. The big critical question, I think, is going to be, can we overcome this? So effectively, I think a strong continuation signal would be a close at around 104.25, 104.50, even better, because that would really signal that we're now in a much different domain, much different trend in dollar yen. But until and unless we get to 104.50, it's really not an attractive buy, just because the danger of yet another fake out and a move back down to perhaps 103, maybe even down to 102.50, still very palpable, as yen has been a notorious fake out trade all throughout the year. But just as the euro looks to be close to the bottom of its near-term trend, I think the yen may actually be on the cusp of a potential new breakout, because the dynamic here on a first to move to tighten story could really bring in much more interesting trades into the dollar yen, and more importantly into the yen complex. So one of the things that I kind of wanted to look at was what's interesting on the yen complex. Nothing, I think, is stronger than this particular pair, the Aussie yen pair. Basically, the whole idea here is if the Fed begins to raise rates, we're basically now starting to think about carry trades for the first time in 5 or 6 years. And of course, nothing is a more attractive carry trade than an Aussie yen trade at this point. Kiwi yen as well, but Aussie yen because of its liquidity. And therefore, the moves here, I think, could be very, very important. We have the 97s as a big area. We are at these big breakout points right here. And again, just as with dollar yen, 104.50 is a big level. If we can take out and hold 97, just close above 97, we could be on the cusp of a brand new upward trend in Aussie yen. Pound continues to decline. Now, what's interesting about the pound here is, pound was thought to be first to raise, and now it doesn't look to be like it is going to be the first to raise if U.S. is going to be first to raise, and that's why you see this massive decline in the pound as the speculative build is very, very badly unwound. Having said this, though, of course, UK economy is certainly not in any bad shape, and it'll certainly be first to follow if U.S. does hike rates. So I do think that given all of this massive decline, you're talking about really 2 straight months of just continuous downward decline. It's hard to call a bottom here, but we are very close. And this 65 level right over here has to be very, very decent support. So there's 2 ways you can kind of play this. You can say, okay, I'm just going to wait actually for maybe a week or 2 of consolidation, that there's no further downsides, that we haven't been able to probe the downside anymore. Or I'm going to just take a leap of faith and start buying here, scaling down to 6,500 on the assumption that we are getting very, very close to a bottom. Now, having said this, technically it looks really horrible. You have all these flameouts. You can't hold the highs. The pound has kind of reversed itself all the way out. But that, in fact, is really what pound does best, which is fake out. I mean, I think in many ways the technicals in the pound are a perfect contrarian signal, because the more they signal a strong sell, the more likely there is they're close to a turn. It's one of those very perverse currencies that you really have to trade almost the opposite of what makes sense. So that's why this 66 to 65 zone could be a really interesting pickup zone for potential bottoming out as a long-term trade. 63.50 probably makes you wrong if we get all the way down there. Dollar CAD failed 110. That was something that we've been talking about in BK for a while. It was pretty clear that this one. Oops, sorry, I just did something here. Let me zoom in again. It was pretty clear that this 110 was going to be a very contested area, and it certainly was. Sorry, I don't know why this is doing it, but just bear with me. It certainly was, and the fact that we held it, we came back down underneath it, does suggest that the 110 area is going to be relatively decent resistance. Having said this, the 108.50 is the really, really big support. And so far, dollar CAD seems to be much more of a churn trade than anything else. Aussie dollar, and let me zoom in here. Let me see if I can just get a better zoom here. For some reason, I'm having an issue on the zoom. Here we go. Aussie dollar has found strong support at this 92.50 level, but big resistance 93.50. It's sort of holding in this channel. There is an interesting, I think, on a relative strength basis, what makes Aussie so interesting is that even if the U.S. begins to be the first to sort of raise rates, Aussie remains, for now, the predominant carry trade, yield hunting trade in the market. And therefore, on a relative basis, it still remains relatively strong. So you can look at Aussie CAD, which is making like 102s today. You can look at Euro CAD, Euro Aussie, which has been essentially a one-way trip to the downside, and today ended on the lows as another potential interesting move here on a relative basis. We don't have any significant Australian. We do have some Australian data next week, but it's all second tier. If any of that data proves even mildly supportive, that is suggestive that the Australian economy can maintain its pace, then we definitely have potential here to go to 140 on the Euro Aussie as we crash even further. So there's a lot of interesting trades here on a relative basis on Australia. And then last but not least, taking a look at the Kiwi. The Kiwi is a difficult trade here because we couldn't hold the 84s. We had a sort of an anemic rally back up through 84s. 85 is now becomes a very, very big resist point. And given the fact that you have a stop on the interest rate front and a continuation of deterioration of economic numbers because of the dairy numbers, hard to get super bullish on the Kiwi. But having said this, though, if you're a bargain hunter and you kind of say, I think the 83.50 may be a small washout level, you definitely have potential maybe next week for a short covering move through the 8,500. So it's not a bad trade in terms of risk rewards as you go forward. But overall, basically, I think next week looks to be relatively small in terms of volatility moves because of seasonality and very little fresh data. But having said this, the key levels to watch for are going to be the 104.50 in the dollar yen, the potential bargain hunting between 66 and 6,500 in the pound, and maybe a very, very small but interesting short pickup, a long pickup here on the idea that we're kind of washed out in the Kiwi at the below 84 level. So wishing you guys the best of luck, the best of trading for next week. This is Boris Schlossberg, over and out.